absolutely clear-cut, sharp words coming in from Mr. Bhatia there at SEBI. We have Vineet Arora, Managing Director at NAV Capital, joining us. Vineet, good afternoon. Good to have you with us here. I believe NAV does invest in SME companies. So to begin with, for us and for our audience, if you can give us a sense of, NAV Capital in terms of SME exposure and what kind of investments you do. And then let's talk about, the comments from SEBI that a discussion paper is around the corner.
Yeah, so we've been very active on the SME space for past 2.5 years. We've done about 60 IPOs as anchor investors. Probably by far we're the largest institutional investors in that space in India. And we do believe in that space. We've also done a bit of main board. In fact, last month there were 47 IPOs in India, and we participated in 16 of those as anchor investors in the IPOs. And we continue to hold those positions. If to look, we talk of froth in the market. What Mr. Bhatia has been telling was talking of a consultation paper. But to me, it's literally like, liquidity and participation go hand in hand. SMEs or small caps or micro caps never had liquidity in the market. As the participation came in, liquidity came in. Now, as it is growing, we are literally stifling it. In my view, what we are doing is literally stifling something which is just mushrooming up. NAV continues to look at small cap, micro cap, because we strongly believe that no large cap was born as large cap. All these companies were a micro cap or a small cap or SME at one point of time. Became big.
No, obviously you start small and then you grow and become large. But what is in your opinion, are there any things which need to be tightened in the SME space? Since you know this inside out, right? As you said, you're one of the largest institutional participants in the SME space over the last couple of years. Is there any lacuna which needs to be plugged? What would those be specifically? Or do you think it is just SEBI trying to temper the enthusiasm? I mean, because it's probably gone a little too far, and it's a regulator trying to do that. What's the sense?
If you look at the data, SMEs, we've had 1,080 IPOs since 2012, which is a 12-year period. And in all, they've raised about 21,538 crores to be precise, as of now. Compare this to Hyundai IPO, which raised 27,000 crores in one IPO. So what kind of froth we're talking of? This is a sector which is very, very important for India to achieve its vision of $30 trillion economy. It provides 40% of India's employment and contributes about the same to the GDP. So number of companies which have hit the markets is not even a fraction of what it can hit. If we can have 5,500 companies on the main board, we can definitely have 6,000-7,000 on SME space. And of the 1,080 companies which have listed, about 320 have actually migrated to the main board. So, in my opinion, the regulator should act as an enabler and not to stifle the growth. Here, we're acting in a bit of haste where we are coming up with, say, NSE came up with this regulation where they need to have free cash flows for the last 2-3 years. Now, how can a company which is investing and growing have free cash flows? I mean, that is very archaic. That's literally, making sure that the companies which need capital don't get capital, whereas the whole vision was that the companies which actually need capital to grow and who don't have access to capital can come to the SME platform and take capital. That, I think, is getting stifled. Having said that, yes, there are issues in the sector. There have been some very expensive IPOs, where the SEBI should probably increase the disclosure requirements, put more onus on the merchant bankers on the disclosure side, tighten the market making where some bad practices have been going on, which Mr. Bhatia did point out. So those things, yes, I agree we should do. But we should not do something like FCFE, which totally becomes stifling for the sector.
No, and lots of numbers you've given us. 1,080 SME IPOs since 2012, 21,500 crores raised, and 320 have migrated to the main board. Would you have a... Sorry?
319 to be precise.
319, okay. Would you have a sense of out of these 1,080 companies, How many are how many are below the IPO price? How many are above the IPO price? I mean, any broad,
These
how is the
about
segment done?
900
Or,
about
yeah.
900 listed with a positive gain. And my sense would be a similar number would be above the IPO price. Like if I look at our portfolio of the 60 companies that we've invested in, if I look at today, probably about five are below the IPO price, and we've exited all of them. But the number is about 10% ballpark, give or take. So
Okay.
90% is still trading above the IPO price.
Okay, fair enough. You talked about increased disclosures. One thing which I think you would have also heard and has come up is that exchanges approve these DRHPs, right? Approve the companies as they come to the market. Unlike the main board where it's the regulator, you got to file with the regulator. Does that sort of how it's done? Does it need a relook, or do you think it can be done with strengthened systems at the exchange level?
I think we should strengthen systems at the exchange level. The whole idea was to make it easier for these smaller companies who don't have the wherewithal to raise capital on the exchange. Once we move to SEBI, SEBI is a regulator. Its job is to enable the legislation and make sure it's followed. Exchanges are both NSE and BSE have done a fantastic job so far in the segment in terms of promoting the segment, creating a marketplace for them. And I think they are very well equipped to actually handle that. So that should remain with NSE, both NSE and BSE, in terms of approving the IPO process because they set guidelines which they need to follow.
Okay, all right. A good discussion, Vineet, and I hope we can speak again soon. Thank you for joining us with that perspective. Appreciate it.